All right, welcome back to Yahoo Finance Live. Miles Ludman here in New York on this Thursday morning, January the 21st. Again, we're looking at futures that are pointing to a pretty unenthusiastic open for the markets. Not a lot going on. We are seeing all three majors higher at this point. NASDAQ futures leading the way, but this comes, of course, on the heels of yesterday's, energetic response, we should say, to Joe Biden's first half day in office. We saw all three majors close at a record high when the closing bell rang on Wednesday. Let's talk a bit more about the markets as they've certainly played out in the last couple of months, what to expect over the rest of this year. Phil Toews is the CEO of Toews Asset Management, and he joins us now to discuss. So, Phil, let's just start with how you're seeing just 2021. I mean, we've had 2.5 weeks of trading here. The action has been enthusiastic, to say the least. Are you surprised by how much that momentum that really kicked off back in November has continued through the early part of this year? Does it have you concerned at all?
Well, so we've been concerned for a long time. We've seen a divergence now between the stock market and the economy. The economy 12 months ago was in much better shape than it is now. The stock market's 15% higher. And so the concern is that if momentum wanes and we see even if the economy continues to muddle ahead and grow, that there could be another divergence. And at that point, stocks could potentially move lower ahead. But at the moment, momentum reigns. And when you get into these situations, you can look back at other markets like 1999, same thing in 2007, where despite valuations, you can see stocks rally for another 12 months or more. And so, there are a lot of challenges ahead for the economy, but when you get into these situations where momentum is driving everything, it can last a while. And so that's sort of the story of the day.
And so even if it lasts for another 12 months, do you feel cautious enough about the potential that it won't last, or that there will be maybe areas of the market that don't perform as well, that you are taking out insurance, so to speak? Or what kind of hedges are you putting in place in case things don't proceed?
Yeah, so that's what's so curious. We have an affiliated organization called the Behavioral Investing Institute. And you get in situations like this where there's so much noise, some of it positive, some of it negative. So it's really hard to gauge what the outcome's going to be. But one of the most predictive things that you can look at is valuations. And valuations, where they are right now, which is around 23, 24 times forward earnings on the S&P 500, puts them in the very tippy-top range of historical measures. So, that's the most predictive way of looking at the markets. And based on current valuations, markets would have basically zero gains for the next 5 years if you're looking at historical numbers. So, behaviorally, when you're in these environments, one of the things that we tell investors to do is to, we reframe it for investors. And when you think about crash, you hear the word crash, you normally think about being delayed and getting to work. But when you're in an overvalued territory, the way crash plays out is that you're in the crash, right? We think that markets are stretched. We think that ultimately, even though we're in a situation where we've got positive momentum right now, we could see markets move lower. So we would strongly recommend that people put in place contingency plans, buy into, with a portion of your portfolio, some hedged equity funds, some strategies that have built-in mechanisms for both trying to ride the markets higher as momentum plays out, but then having some kind of a plan in place to attempt to de-risk if markets turn lower.
Phil, we were joking around in our morning meeting. We saw the latest Powerball winner in Maryland. They won, reported $730 million. Like, wow, what would we do if we had that type of money? Where would we invest? But it ultimately raises another question. You look at the bank earnings the past week; they've seen massive inflows into their wealth management businesses. We're talking double-digit increases. In large part, everybody's chasing market performance. If you do have large sums of money, you've been sitting on a lot of gains. Where do you invest now for the next decade? What are there other alternatives to the stock market? Because I would argue that Tina feeling has been driving the stock market higher. Where else could you put your head?
Well, so there's another question about framing, and I think people try to insist on answering the question: are you fully invested, and do you just write it out, or do you leave the market and wait until you have more reasonable valuations? And we would create an alternative path. We have something we call a behavioral portfolio, and what that portfolio is designed to do is recognize that markets are generally efficient. So you want to be fully invested in a relatively somewhat conventional way. But if you can take maybe 50% of your equities and put it into something that can potentially dislocate or uncorrelate from negative market activity, then you have this built-in mechanism in place to address declining markets. It would be exceedingly difficult to not be invested right now. And if you make the decision to leave the markets, you could be punished for 6 months or 12 months. As you say, you've got all the money on the sidelines. So money could be pouring into the stock market for the next 6 months. But unfortunately, if earnings aren't justified by the price, or prices aren't justified by the earnings companies are receiving, ultimately it fails. So that's the difficult behavioral riddle, is that you have to understand that earnings have to justify the pricing.
All right, there we see the opening bell live on the floor of the New York Stock Exchange. My Teresa ringing the bell this morning. Good old-fashioned interesting PE story there if you want to look it up. Company now going public, $2 billion valuation. There were concerns, I think, during their takeover a couple years ago that it was undervalued or overvalued maybe at $200 million. So quite a saga there. Phil, let's talk finally about the area of the market that everyone seems to want to talk about these days, which is crypto. But maybe let's do it this way. We see the energy unleashed in retail with SPACs, with electric vehicles. Everyone wants to be speculating these days. Everybody's a genius because the market goes up all the time. How do you deal with an environment like that where everybody's a hero because it's just been, the way it's been for the last few months? Certainly the clients that you're talking to may have a little FOMO, even if they're sitting pretty with 10, 15% gains on a nice sizable nest egg.
One of my colleagues here at Toews was talking about how he invested in 10,000 in Tesla and it's worth 200,000 now. So a 20x number. You've got so many people out there that are like that. There's a false assumption being made alongside valuations like that. And that is that you can invest in some of these high-flying companies or Bitcoin, and there's going to be a way to know when markets start to roll over and you can get out. But one of the things we talk about a lot is the fact that, you look at last year, Tesla is a good example. It fell 50% in the first quarter and 34% in September. If that happens again in 2021, you're not going to know if it's the beginning of the end or just a blip in the markets. So it's almost impossible to know when it's just a blip or a considerable downturn in the market. And as a result, if you're an investor in some of these high-flying names that don't really have realistic valuations, you're vulnerable to 25, 50, 75% or more losses. So it's a gamble. I mean, you have to recognize that if you're going to do that, come to it with an approach to find a way to de-risk if things turn lower, and you're just gambling. And that's really all it is.
All right. Phil Toews, CEO, Toews Asset Management. Phil, great to talk with you this morning. Interesting stuff. And I know we'll be in touch.
Thanks so much.